Imagine waking up one day to find that every dollar you've ever borrowed has vanished into thin air. No student loans, no mortgage, no credit card bills. Sounds like a dream, right? But for many Americans, that world would be unrecognizable. Why? Because debt isn't just a financial tool here. It's woven into the very fabric of our society. Welcome to the Economy Unpacked Daily YouTube channel. From Wall Street to your street, we share the world of money in a clear way. Today, we're diving deep into America's unique relationship with debt. Unlike some cultures where borrowing is seen as shameful, in the U.S., it's often viewed as a normal part of life. But how did we get here? And what does it mean for our society? Let's start by turning back the clock. After World War II, America experienced an unprecedented consumer boom. Banks expanded, credit cards hit the scene in the 1950s and 60s, and the government pushed hard for homeownership. Suddenly, borrowing wasn't just for emergencies. It was the key to unlocking the American dream. Fast forward to the 1980s and 2000s, and we saw deregulation and aggressive lending practices take hold. This cemented debt as a fact of everyday life for most Americans. It's a far cry from cultures where borrowing is stigmatized, showing just how unique our mindset really is. Now, let's break down the types of debt that touch almost every American's life. First up, student loans. These are often framed as an investment in the future, making debt synonymous with education and opportunity. Then we have mortgages, viewed as good debt, because they build equity and align with the cultural milestone of homeownership. Credit cards are marketed as convenience tools, but they're often linked to consumerism and lifestyle spending. And let's not forget car loans, which are almost unavoidable in our car-centric society. When you step back, it's clear that debt is woven into nearly every major life decision Americans make. But why do we accept this? The answer lies in both psychology and social norms. Our credit score system actually rewards borrowing, making debt a measure of financial trustworthiness. There's also social pressure to keep up with the Joneses, fueling consumer-driven lifestyles. Perhaps most importantly, debt is tied to aspirational goals like higher education, homeownership, and mobility, the very pillars of the American dream. It's not just tolerated. It's often celebrated as a sign of progress and ambition. However, this acceptance comes with serious consequences. Take the student loan crisis, for example. Americans now owe over $1.7 trillion in student debt, burdening young generations with financial stress before they even start their careers. Credit card debt, with its high interest rates, can create long-term repayment struggles that feel impossible to escape. We can't ignore the role of over-leveraging in major economic downturns like the 2008 housing crisis. On a personal level, debt-related stress contributes to inequality and mental health issues that ripple through society. But the tide might be turning. Younger generations, particularly millennials and Gen Z, are challenging traditional debt norms. Many are skeptical about taking on massive student loans or rushing into mortgages. Instead, they're exploring new financial models like buy now, pay later services, fintech apps, and digital lending platforms. We're also seeing the rise of debt-free movements and financial minimalism. These trends reflect a cultural shift in how younger Americans view money and success. They're asking tough questions about whether the old debt-driven path to the American dream still makes sense. So, what can we learn from all this? How can we navigate a culture where debt is so deeply ingrained? Here are some practical tips for smart debt management. First, learn to differentiate between good debt and bad debt. Good debt typically builds assets or increases your earning potential, like a reasonable mortgage or carefully considered student loans. Bad debt often comes with high interest rates and doesn't contribute to your long-term financial health, like credit card balances or payday loans. Use credit responsibly to build wealth instead of falling into traps. This means paying off balances in full each month when possible and being strategic about which debts to take on. Consider methods like the debt snowball or avalanche to tackle existing debts efficiently. Most importantly, be wary of predatory lending practices. Read the fine print, understand interest rates, and don't be afraid to shop around for better terms. Remember, just because debt is normal doesn't mean all debt is created equal. As we wrap up, it's clear that debt in American culture is a double-edged sword. It's a tool that can enable dreams and open doors, but it's also a trap that can destroy financial stability if not managed carefully. Our relationship with debt is unique, shaped by history, culture, and economic forces. We'd love to hear your thoughts. How does debt factor into your life? If you're watching from another country, how does your culture view borrowing? Share your perspective in the comments below. Remember, understanding these cultural forces is the first step to making informed decisions about your own financial future. If you found this video helpful, please hit that subscribe button and share it with friends who might benefit. Together, we can unpack the complexities of our economy and build a smarter, more financially savvy society. Until next time, this is Economy Unpacked Daily, helping you navigate the world of money one video at a time.